My name is Carson. I'm a managing partner, founder of Humla Ventures. We are a venture capital firm in what we call financial markets ecosystem transformation. We are early investors in Deribit, which we just sold to Coinbase last week, and Hidden Road Partners, the prime brokers, sold to Ripple, and 60 other crypto native related, AI native related, to everything financial, these types of things. I welcome you guys here today for this great panel we're going to have on the, I'll read it so we get it perfectly correct here. The banks are the plumbing of the global economy. Bitcoin is introducing new plumbing, settlement, custody, and monetary skills that do not neatly fit into the existing bank models. Today, we'll explore the new banks, legacy and crypto native, and how they can coexist and or compete with and evolve into the providers for the next generation of the financial infrastructure. I think it's going to be one of the most interesting panels we're going to see. I've been talking to these amazing people behind the scenes, and there's just some amazing things that they're doing and some amazing opinions. So we're just going to go through, and I'm going to introduce them one by one and let them introduce themselves. We'll start with Caitlin Long.
Caitlin Long, founder and CEO of Custodia Bank, and Wyoming native. Got this Wyoming ball rolling in 2017.
Amazing, amazing. Joey?
So I'm an executive director of Xapo, Xapo Bank. So hopefully some of you know, true sort of Bitcoin OG. We've been there from day one since 2013. I also act as the specialist consultant to the United Nations. So I help train and develop regulatory policy and government developments in countries all over the world. And the UK, I'm part of the all-party parliamentary working group on developments there.
Christopher Calicott?
That's right. Good morning. Yeah, I'm co-founder, managing partner at Trammell Venture Partners based in Austin, Texas. We invest globally. We've been investing in the space since 2014, 2015 timeframe, and led the charge on a dedicated Bitcoin native venture capital strategy back in 2020. We've invested in companies like Kraken, Unchained Capital, Voltage, and others you probably recognize. We've done quite a bit around credit and the way that interfaces with banks and novel credit strategies related to Bitcoin.
Great. And finally, David Ripley, the CEO of Kraken.
Yep, Dave Ripley, co-CEO of Kraken. We're the host of this event, so hopefully we've done a decent job in describing to you a little bit about Kraken already, but one of the oldest cryptocurrency exchanges out there, now a full crypto platform, quite a global business. Have some history in Wyoming. We have a number of our businesses run out of here as well.
Great, great. Thanks, everyone. So I'm going to start with a couple pointed questions, and then we're going to get into some little more pointed questions. But I want to start with Caitlin. I think we're in Wyoming, so she's the native celebrity here. You formed a bank specifically to solve custody and compliance. What were the kind of must-have regulatory and operational decisions that you had to make early on, and on that others have been not able to make or that should be making?
Well, in the U.S., there are three basic types of financial institution licenses. There's the money transmitter licenses, which is most common, and that's what fintechs use. Then one layer above that, with higher capital requirements and examination frequency, is trust companies. One layer above that is banks. And banks are at the top. Banks, meaning depository institutions, they are authorized by law to accept US dollar deposits. So we decided, because we needed to plug this technology into the root of the payment system, which is FedWire, that we needed to be able to get a FedMaster account. 5 years later, almost, here we still are, but hopefully, some progress soon. We knew going in that was the most difficult decision, and that's why we spent our time and money and effort, and boy, did we encounter a very politicized Federal Reserve.
So do you have this license now?
We do not, no.
And what happened?
Well, we sued. We were denied. We were disparaged knowingly with untrue facts told about us very clearly. At the time, it was confusing, and we knew that all the debanking was happening. I remember talking to people. Yes. This was right after FTX. It was pretty clear in the industry very quickly that the debanking was happening. And then it just snowballed and got a lot worse. Nobody, to my knowledge, was debanked as often as we were, because if the Fed had been able to kill us, our lawsuit would have gone away.
Yeah, and it sounds like we're getting close to the end of that now.
I look at the 10th Circuit website multiple times a day these days.
So how many people here have been debanked? Anybody? Like a few of us? Yeah, I was in the
Oh, more than a
signature. That was
few.
a lot of
Yeah.
fun there. So it's definitely a very common, especially if you have anything to do with the crypto space. Joey, you've been in one of the most influential brands in the space for some time. I know that you sold some of the stuff to Xapo, but you guys have a unique global footprint on the custody model. What are some kind of like practical trade-offs that you've seen for online banking, third-party custodial, like bridging? You were so early in bridging the kind of like private wealth with crypto, and now it's all coming. It seems like it's all kind of coming towards your way. So like, what are the trade-offs you've had to make?
It's been super interesting. I mean, one of the things that's relatively key about Xapo, when we talk about in the banking context, is we are a Bitcoin native business. We were the largest wallet provider in the world back in the day, 2013, et cetera. So we are, call it a Bitcoin business that's built into banking facilities, not the other way around. We're not a bank that's exploring blockchain infrastructure and technology.
So the opposite of Caitlin.
Yeah, well, it's slightly different. I mean, Caitlin's an expert and has come in with those dual layers, but if you speak to standard banks, they're kind of exploring the asset, exploring and trying to understand the risks. You know, I say it quite often, and I love the quotes, the creation of the electric light bulb, whatever it was, didn't come from the evolution of the candle. It needs a new start, and you need to think differently, you need to adapt differently, you need to build out models completely differently, and that's really what we've done. So I think, like, to answer your question, Greg, more specifically, so we hold BTC within the structure in a completely off-balance sheet, insolvency, remote, regulated entity. It doesn't touch the bank directly. Okay. So we're very, very, very careful around the principles around, let's call it self-custody, the principles, not the concept directly, because when you're dealing, I mean, I'm not going to be critical of any particular structure, but you know, I think a lot of stuff in the self-custody world, you know, when people were buying BTC at like $150 and you had like 500, that was fine for certain kinds of arrangements. When that 500 becomes worth $500,000 or $1 million, you're a little bit more conscious around the infrastructure. Yep. And the risks that are developing, you can look at the IBIT models, and some of the, not family offices and some companies or wealthy individuals don't have red team defense systems to test for potential breaches, et cetera. So, you know, you've got to be very, very careful. And we're there to provide that sort of just secure, simple platform that's completely Bitcoin.
Sounds like tech and security become a super important part of even more than it already is.
Tech, security, and trust. You know, like in the classic banking world, if you're dealing with a Swiss private bank or a New York bank that's been around for 150 years, there's an element of relationship and trust in that brand. In the crypto world, it's very, very different. And one of the reasons for that is that regulatory standards are just so absolutely diverse around the world. Yeah. If you're regulated as a bank in Wyoming, New York, or Australia, or London, there are very intricate differences. If you're regulated as a crypto-related platform in Wyoming versus Singapore versus et cetera, there are massive disparate differences. Yeah. So trusting the counterpart that has exposure, offers you exposure to virtual assets, that isn't properly regulated like the Krakens or the Custodias or the Xapos, there's a lot of risk there. And consumers are just sort of trying to understand and learn around that, I think.
Yeah, I don't even know if they're trying.
Well, I mean, unfortunately, influential factors when you're doing due diligence on a crypto provider tend to be Twitter or, you know, influencer feeds. Yeah, exactly. So, and that's not really good enough. So, you know, in the FTX example, which we're not going to go into, obviously, but I would always say to people, look at the basic governance structure of that environment. Would you put your family on a plane with a pilot that didn't have a pilot's license? Of course you wouldn't. So why would you put your assets within an infrastructure where the people controlling that organization, you know, don't have the relevant experience?
That's a very good point. Very good point. Yeah. Christopher. Christopher is an investor, a VC, a very famous VC. From an investor standpoint, which infrastructure layers like custodial, settlement, tokenization, interbank rails, liquidity primitives, what are the undercapitalized today? Like, what are the opportunities that you're seeing now? And then kind of bridge that with like a few years ago and what you think you need to move your focus to now.
I might probably have a bit of a contrarian perspective on custody specifically. I think kind of building on what you were saying, what you were alluding to is like Bitcoin's software itself has had some of the most sophisticated eyes in the world auditing it, looking at it for 16 3/4 years at this point. And so building a custodial framework using the protocol itself, you get a lot for free. But it doesn't necessarily fit into like a classic sort of bucket. We made some very early bets on multi-party multi-sig in a way to collaborate in securing the assets. This has been kind of popularized by Unchained Capital, but it's native to the protocol. Custody itself tends not to be a huge venture scalable business, but it's an incredible adjunct to other kinds of value-added services and things like that. The one thing that's interesting, and my kind of perspective on the investable landscape, and I think to your point, the market still isn't necessarily thinking about some of the questions because they are inherently somewhat technical. And the element that we haven't said here that I think I felt very strongly with, and I know we've gotten it right. Eventually, it was proven to be right, is that rehypothecation, which is so fundamental to the way that we secure equities, bonds, dollars, and businesses, it works out really fine when you can, turn a lever and print some more dollars. One of the most fundamental foundational properties of Bitcoin is it's uniquely scarce, and so there's no one to make you whole when there's a loss. Now, I think that there's a way that you could price a rehypothecated custodial solution in that context. But the credit cost is far higher and much differentiated. And right now, the market, we still don't see quotations of price for credit. If I need to take a loan against Bitcoin or something like that, I'm getting one quoted rate. And you better know, to your point, exactly what's going to happen with that Bitcoin, or you might be at a total loss forever with those assets. So, to your question, I think we've made some bets. I think we're still waiting for some of that educational piece for the market to catch up because it's just sort of technical.
Is there a couple companies that you might mention that you've invested in the last kind of 6 to 12 months you think are going to be in the future?
Yeah, on the banking adjacent side, I think what Voltage is doing, thinking about the Lightning Network as this massive information network that happens to be payments native, retains the bearer asset-like elements of Bitcoin itself, but now we can do, through Taproot Asset Protocol, issuances of stable coins. They're looking at it in this new strategy in a novel way, which is to say, when Bank of America partnered with competitor banks to be issuers on this network of information, they're kind of seeing that as the next layer for something that's banking adjacent, and certainly really to credit Unchained Capital. We've been through, I guess, 5 rounds of funding with those guys, and they're hitting escape velocity, so it's great to see.
Great, yeah. I think it's the only killer app in crypto, to use the broad thing, has been trading and finance. I mean, everyone else trying to do other things, but the only thing that's really been impactful is this concept of this kind of the market stuff. So this is very interesting. Yeah. There's a lot of interesting companies even now that are just emerging in that space. So I guess go ahead. I was going
to add one detail about where we're going in that investable place with these credit arrangements. Right now, the market and institutional players are trying to figure out how to do what they might do in the traditional mortgage space, where they securitize the origination and the cash flows and then sell that debt. And so thinking about that, but in this protocol native custody model, it's really interesting, but the Fidelities of the world are working on it and others. So I think that's a really interesting investable landscape going forward as well.
Yeah, we invested in Credora, which is like a margining credit, like crypto native credit, and S&B invested alongside us and stuff. It's a very interesting one. So I guess that kind of feeds right into what Dave's doing. Like, hot topic for you guys is like proof of reserves, account auditability, transparency in like crypto native exchanges and stuff like that. What is the practices that you think are going to be important for the exchanges, and what are you guys doing to kind of set you guys apart in those concepts?
Well, unfortunately, I don't know that it actually is so much of a hot topic. It definitely was like post FTX. Like every exchange out there jumped to the forefront and said, "Hey, we got proof of reserves," and it was really messy. We saw a huge number of companies, exchanges, custodians, whatever, publish the most bizarre proof of reserves in that instance. For what it's worth, Kraken actually, we did our first proof of reserves not after FTX, but a decade before that. Early days when Jesse as co-founder and others launched the exchange. Look, I think there's some clear practices that are helpful, important. Providing more transparency is better. Engaging more audits and attestation is better. We've continued the practice now. We conduct a proof of reserves every quarter at this point. For what it's worth, I mean, it's really just being transparent around what assets we have and what the customer balances are. There's probably one novel piece of our proof of reserves that I actually don't know if anyone else has adopted, and we've had it ever since, which is we actually publish a Merkle tree of all of the customer accounts and their balances where you can go and check if, hey, were my balances included in the proof of reserves and at what level and what date. I think that's actually a novel piece to kind of like bring more of the information to the individuals. Whereas I think, for the most part in TradFi, it's kind of a bit locked away a bit more with, the financial auditors and regulators, which are helpful things when we're talking about protecting funds, as everyone has noted here. But yeah, so look, I think as we see more, more of the businesses across the globe, because I mean, regulation, for what it's worth, is in various different places across the globe. I mean, we're talking a lot of the discussion here, for the most part, is around the U.S., but there's, we're at different points and places across the globe. But as those advance, ideally that some of these practices that we started doing on our own probably will make their way into the regulations.
Does that mean that when you do this Merkle tree thing, does that mean that you actually have the customer's funds are either independently in all these different accounts?
It doesn't. Like no. Accounts? Yeah, that's actually, it's a good question. That's not actually what I was referring to in how it works. It is actually as simple as the balance is published in the Merkle tree that is then signed by the auditor so that you can go and look and say like, hey, was my balance included, without actually divulging all the client balances to everyone. Obviously would be quite suboptimal from a privacy standpoint.
Would you say that Kraken or the other exchanges, are you moving more towards becoming kind of like the person's crypto bank or overall bank?
Well, I think this is actually a very hot topic for what it's worth. I was
shooting for hot topics.
Yeah,
I had to find one.
So I think you got it now. This is look, right now it's amazing. I mean, we're still at a place where there's only a handful of banks that will work with crypto companies out there. Yet simultaneously, we're now in discussion with just as many or more banks that want to add crypto to their offerings for their customers, which is kind of fascinating. They certainly say they're serious about it. We just went live with a bank in Europe, Boekbank in the Netherlands, which is a sizable, what they call a challenger bank over there. It's a full regulated chartered bank over in the European Union. And they offer now Bitcoin buying and selling to their customers. We see that a little bit more in other parts of the world, but here in the US, like I said, we're talking to dozens, and basically all of the large banks out there are trying to figure out how they're going to add crypto to their offering.
But does that mean that they want you to be their partner for like custody and on-ramp, or are you actually like in the case where there's not that many banks, are you becoming more bank like? Do you consider yourself like a bank?
Well, I think it's all of the above is going to happen. So, banks are going to start offering crypto directly to their customers. Crypto companies, what used to be just purely crypto companies, will probably start offering more, traditional financial products. Kraken's probably leading the way in that. We made an acquisition in NinjaTrader. That's just a traditional retail futures broker. Yeah. We're now a registered broker-dealer in the U.S. offering traditional equities. And probably the most interesting thing is crypto and its tech will start running more and more of what we refer to as TradFi, right? So tokenized equities is probably the most interesting one.
Yeah.
And maybe the most interesting thing we've done, we have
You actually do tokenize equity.
X stocks out there, they're fully permissionless tokens.
Okay.
Asset under management there for X stocks is approaching 100 million. We're really seeing gains every day. And so it's, I think, one of the most exciting things out there.
That brings me into in the question I think is we talked in the and behind the scenes on, and I think is interesting for you is being Bitcoin native critical to all banks and all this industry? Is that going to be a make it or break it? Or if they don't adopt this standard, are they going to be disintermediated? Are they going to disappear?
Can I jump in, Greg? Like,
it's
to
for all
follow
of you,
from Dave.
I think we have some disagreement here, so hopefully.
No, I think it's, there are 2 points. The first is, you know, we've built a business that's designed to what we call protect, store, and grow your wealth. And it's great that BlackRock last year said 2% allocation to BTC should form part of a balanced portfolio. That's wonderful. We've been saying that since 2013. So we see ourselves as like a bridging facility between those worlds. So you gain exposure to BTC within the Xapo banking infrastructure, and you should be able to interact directly with Kraken or other platforms that do different things in the world. So we built stablecoin payment rails into and out of your bank account directly to provide that bridging facility. And it's come up lots of times over these days. Mm-hmm. The convergence of those systems is happening more and more. But we believe that the exchanges won't do exactly what we do, and we won't do what the exchanges do, and we will operate slightly differently. I think that I believe is...
But you are Bitcoin native.
Only Bitcoin, yeah.
And so I guess, Caitlin, you're starting this custodial bank. Is Bitcoin native an important concept for your bank?
I think it will be eventually.
Right.
But since our business plan in 2020, we had it in our business plan to issue stablecoins on both Liquid, which is a Bitcoin sidechain, and Ethereum, and that's been in our business plan since 2020. We're finally, because of all the regulatory problems, finally this March, we were able to issue with our banking partner Vantage, which is a bank run by IT guys.
Right.
And they get it. They really get it. Mm-hmm. And it's been just a joy. They're the front end, we're the back end. I don't want to get too far ahead of them. Mm-hmm. But we have figured out how to bring tokenized bank deposits and stablecoins together. I believe eventually that it will all be on Bitcoin, but if you look at our press releases, we issued on Ethereum. Mm-hmm. That's just where right now the most liquidity in stablecoins is on Ethereum. But this is something a lot of folks don't know, that tokenized bank deposits were carved out of the Genius Act. So the Genius Act only applies to non-banks issuing tokenized dollars. But banks can issue tokenized dollars already. If you look very closely at the press releases we put out, we carefully worded this, but we said we worked closely with our regulators. Well, their regulator is the Fed and the Texas Department of Banking. Ours is the Wyoming Division of Banking. We don't do anything by policy, either one of us, unless we have permission, so yes. Wink, wink. So we were the first to get a bank-issued stablecoin out in March, and we're scaling it, but the aha is we've figured out how to connect tokenized bank deposits to stablecoins, which will bring traditional banking systems into DeFi in a big way.
Wow, that's amazing. In my opinion, and I've said this for actually many years on many stages, that I'm kind of like stablecoin maximalist in the short term and Bitcoin maximalist in the long term. And I would predict, I think, 10 trillion in stablecoins by the end of the decade. So I think it's quite a bit. And
I completely agree with you.
And I think, and it's very cool that you're one of the first banks, but the banks will have these kind of like stablecoins as a central. But will stablecoins become their own banks, like even without institutions around them?
Not unless they have bank charters. And what most of the folks are applying for today is trust charters. But remember the distinction I meant at the beginning. There's money transmission licenses, easiest to get, least regulated. Trust, bank. Only banks can get root access to Fedwire. So if you're really going to integrate in, you have to be able to legally take deposits, which trust companies cannot, and you have to be legally eligible to go directly into Fedwire. Nobody in this space has got direct access to Fedwire yet, but that's what our lawsuit is.
Yeah, I was going to say, just in the context of listening to Caitlin talk, and obviously the panels before talking about the position of the US, what's happening in the US has like some giant upsides, but it's not all super positive, or there are some other things that need to be considered in a global context. I think the upside is that when you have that level of clarity, firstly, it's only step one, really, when you look at the Genius Act. It's really, really fantastic in a bigger way than people in the US fully appreciate. I think that when the world looks at a domicile to base their global-facing business, they now also think of the US. Before, it was sort of, if you want to service the US, you have to be regulated there. That's very, very different.
Yeah.
But if you don't, just don't touch the US. Now, it could become very much a global hub. That's a very big positive that people aren't fully understand or seeing yet. I think that's going to happen. The downside is the pace. I mean, listen to Caitlin talk about a 5-year process and talking. I mean, I used to be part of this. I used to be part of that. I've been part of the water and RegTech discussions. Lots of smart people in that room. Lots of them are here. They were talking about what a security was in 2017. And in 2024, they were still having that discussion. And for me, it's just absolutely incredible when you see different parts of the world and the frameworks they've built and the security they've offered and the clarity that's so unbelievably clear. You're sort of, well, okay, you've got to sort of start accelerating things a bit in a global context. So yeah.
So it seems very true that this is creating a global, Bitcoin and stablecoins create a global framework for even regional or like regional banks. So what about the Bitcoin as the technology? What do you guys think, Christopher and Dave?
So I think to your prior question, I think for me, even midterm, it's a clear yes. And I make a couple of technical reasons as to why I feel that way. Now, it's my job to sort of peek around corners and make an educated guess on where the puck's moving. I think that Bitcoin on one, just as a first principle, is a flight to quality. It is like the conservative, which is certainly a principle of banking. I might have a slightly different view than Caitlin, or maybe it's an additive view, but I think that asset-backed stablecoin issuances are going to persist for the foreseeable future.
Sure.
It's going to be an and, not an or. And I think that if you look at the topology, the architecture of the Bitcoin network, including Lightning, including things like Arc and other innovations for scaling Bitcoin, it's the objectively only truly decentralized network. So when you need state resistance and all these other elements, it has to go globally. If you're a bank and you're thinking about doing an issuance or supporting or participating, you already have the reality that most of the lending books are dominant Bitcoin, and it's not even close.
Right.
And the platform that you would choose to build on, you made a very pragmatic choice. It's the obvious choice at the time. But making a longer-term bet, understanding where your loan book is, where are you going to adopt? It seems like historically, if you look at the second place blockchain, it's always been something Bitcoin and then something else, and it changes.
Bitcoin is the most secure network of all time, essentially. And I agree. I think that the Bitcoin will become the structure for everything in this kind of blockchain eventually, but we do need programmability. So we either need something like OpNet, which is launching in one of the companies I invested in a couple of months, or a BIP to add one of those two programmability methods needs to be adopted from the financial side. Dave, is Kraken, are you guys active on like the policies and the future of the industry, and how Bitcoin oriented is Kraken?
So first, huge plus one to what you guys said before about being short-term bullish on, or near-term, medium-term bullish on stable coins, tokenized deposits.
Stablecoin maximalists.
And well, maybe not that far. And then long-term bullish on Bitcoin, Ethereum, other cryptocurrencies. The adoption of stablecoins is going to fantastically improve the adoption of like Bitcoin, Ethereum, other assets.
Correct.
We're going to get all of these various different financial services institutions using stablecoins integrated into their tech, integrated into using payments for, from cross-border to retail to what have you. And then it's just this is maybe going towards a little bit of the Kraken topic, it's just a simple, flip of the switch, different drop-down, item in the drop-down list for someone to like send a different asset at that point in time to all the same places. And once we kind of see, liquidity grow, obviously volatility, does come down on, cryptocurrency assets, Bitcoin being the most, established there, the most liquidity, the most price stability, over time. So, being the one that I think. So I think that's just a matter of time. It's probably a long time frame. I mean, to get stable coins integrated everywhere, and then we get to that point.
It'll be faster, I think.
Yeah.
But we are actually close to running out of time. I just wanted to take a moment to say thank you to the organizers, and thank you to all the guests for coming here, and especially, Caitlin, Joey, Christopher, Dave, thanks for taking your time and discussing this great topic. We don't have time for questions from the audience, but feel free to come find us afterwards if you want to chat. We're all super passionate about this space. It's been an honor to be on stage with you guys, so thanks everyone.